Hello everyone, I am Pratap here. We are at part 2 of lesson 14. In this lesson, let us discuss about bearish trade setup. And this lesson is having dependency on the earlier lessons. In case if you did not complete the earlier lessons, please visit our YouTube channel. There you click on the home page and scroll down to the playlist Supply Demand Zone Price Action course. Click on this playlist. All the training videos are available in this playlist starting from lesson 1.1 until the most recent lesson in an order. Please complete all these lessons one by one and then you can get into lesson 14.2. I am also providing the link to this playlist in this YouTube video description. You can also click on the link and directly get into this playlist, or you can also access from our Telegram group. I am also providing the link to the Telegram group in this video description. So please make use of this opportunity and strengthen your skills by going through all these lessons one by one. Now let us get into our main discussion, that is a bearish trade setup. Earlier lesson we discussed about bullish trade setup, and in bullish trade setup and we mainly plan our trades in favor of the price direction, that is when price is moving from higher time frame, that is HTF demand zone to HTF supply zone. But the trend should be uptrend because it is a bullish trade setup. We can also plan the trades against the primary direction, that is when prices are moving from supply zone to the demand zone. Still we can plan long trades because the trend is in our favor, but at the time location plays the major role. So this is what we land for the bullish trade setup. The similar kind of rules you will be learning even in the bearish trade setup, but those rules are quite reverse compared to the bullish trade setup related rules. So let us discuss all the rules one by one. And bearish trade setup, mainly we should plan in downtrend. The reason is you already land. Trend is our friend until the end when there is a bend. So that is the reason why we should not plan our trades against the trend. Because you want to plan a bearish trade setup, the trend should be the downtrend. Always our short trades should be planned when the trend is the downtrend. This is the important point you should not forget. Apart from that, the direction also plays the major role, price direction. When you have to plan our short trades, especially when the HTF prices are moving from HTF supply zone to HTF demand zone, especially when prices are moving from HTF supply zone to HTF demand zone. If that is the case, where you have to plan your trade? In high on the curve or equilibrium or low on the curve? This is the question comes into our mind. But you should remember, when the primary trend is supporting, curve does not play any role. Curve means location. So the location does not play any role when primary trend is supporting. So that is the reason why you can plan short trades in high on the curve. You can plan short trades even in the equilibrium. Even you can plan the short trades in low on the curve. In general, low on the curve is the buyer's location. That is the reason why we don't plan short trades in low on the curve. But when the primary price direction is in your favor, you can also plan short trades at low on the curve. That is also possible. But the condition is our primary price direction should be in our favor. What is primary price direction? That is the price direction at at the higher time frame. The primary price direction means the price direction at higher time frame, that is HTF time frame. You should not forget. HTF time frame always tells the primary price direction. And the secondary price direction, that can be identified on the intermediate time frame, that is ITF time frame. So these are the two important points you should remember. Okay, if you look into this chart, currently the primary price direction, that is HTF price direction, that is supply zone to the demand zone, because prices are moved into the supply zone. From there now prices are again moving back towards the demand zone, HTF demand zone. The moment prices entered into the HTF supply zone and turned its direction, now the price direction is changed to HTF supply zone to the HTF demand zone. Earlier, the price direction is HTF demand zone to HTF supply zone. Now price direction is changed to HTF supply zone to HTF demand zone. When the price direction is changed, now short trades will be enabled. But some conditions are applicable. All those conditions let us discuss one by one. Okay, at this point of time, what is the trend? Let us assume the trend is a downtrend. Now what is the price direction, HTF price direction? HTF price direction is HTF supply zone to HTF demand zone. Now curve doesn't play any role. Even then, let us look into the curve. Even then. So what is the curve now? What is the current location? The current location is at the high on the curve. Let us assume prices are at high on the curve. So in this scenario, can we plan short trades? Yes, you can plan short trades. Now let us assume the price is at the equilibrium. Can we plan the short trades? Yes, now also we can plan. Okay, now price is at low on the curve. Can we plan the short trades? Yes, now also we can plan the short trades. Why we can plan the short trades? The reason is trend is downtrend and HTF direction is HTF supply zone to the HTF demand zone. When the HTF price direction is from HTF supply zone to HTF demand zone, we can also plan short trades at the low on the curve. Once prices enter into the HTF demand zone, can we plan the short trades in low on the curve? No, we cannot. The reason is price direction is now changed to HTF demand zone to HTF supply zone. At the time low on the curve, you cannot plan the short trades. So is this point clear? But here one condition is there. Always you should remember one condition. Even though HTF price direction is from supply zone to the demand zone, even ITF price direction should also be in our favor. If ITF price direction is against to us, you cannot plan the short trades. So what should be the ITF price direction? ITF price direction also should be supply zone to the demand zone. That is ITF supply zone to ITF demand zone. Sometimes we can plan the trades against the HTF price direction. We can plan trades against the HTF price direction. That we will be seeing in this very soon. But you cannot plan short trades. You cannot plan short trades against the ITF price direction. That means if ITF price direction is demand zone to supply zone, you cannot plan short trades. Short trades should be planned only when ITF price direction is from ITF supply zone to the ITF demand zone. Look into this scenario. Now what is the HTF price direction? HTF price direction is from HTF supply zone to HTF demand zone. As we already learned, you can plan trades in high on the curve, equilibrium, even in low on the curve also you can plan. Now let us assume at this arrow mark there is a ITF demand zone, not HTF demand zone. HTF demand zone is just below it is there. But exactly at arrow mark, let us assume there is a ITF demand zone. The moment prices entered into the ITF demand zone, it changed the price direction. How it changed the price direction? From ITF demand zone to ITF supply zone. Prices are moving from ITF demand zone to ITF supply zone. In that situation, can we plan short trades? The answer is no. You cannot plan. You have to plan short trades only when ITF price direction is from ITF supply zone to the ITF demand zone. ITF supply zone to ITF demand zone. At present, ITF price direction is ITF demand zone to ITF supply zone. In such kind of situation, you cannot plan short trades, even though the trend is downtrend. Even though HTF price direction is from HTF supply zone to HTF demand zone, you cannot plan your trades even in low on the curve, even in the equilibrium, or even in high on the curve. That is the reason why earlier I told you. Sometimes you may plan your trades against the HTF price direction, but not against the ITF price direction. ITF price direction should always be in your favor. This is the most important point you should remember always. Okay, now let us look into how we can plan trades against the primary price direction. What is primary price direction? That is HTF price direction. Against HTF price direction, you can plan the trades, but not against the ITF price direction. Okay, now what happened? Prices entered into the HTF demand zone. Now HTF price direction is changed to HTF demand zone to HTF supply zone. Earlier it was HTF supply zone to HTF demand zone. The moment prices entered and turned, the price direction is changed. HTF demand zone to HTF supply zone. In this scenario, can we plan short trades? We can plan, provide ITF price direction should be in our favor. Apart from that, trend should be in our favor. Apart from that, location also should be in our favor. If location is not in our favor, you cannot plan the trade. If trend is not in our favor, first of all, trend is not in our favor, you cannot plan at all. You need not worry about the direction, price direction or location. Always a trend is our friend. So that's why we plan trades always according to the trend only, not against the trend. Okay, now let us analyze all the scenarios one by one. Even before that, what is the location is telling? Curve should be used, curve means location. Location should be used when we trade against the HTF price direction. Trend is in our favor. ITF price direction is also in our favor. But what is not favor? HTF price direction is not in our favor. In that situation, if curve is in our favor, that means location is in our favor, you can plan the short trades. Let us analyze the scenarios. The first scenario. Assume here is a HTF supply zone. Okay, the moment prices entered into the HTF supply zone and turned, the price direction is changed. Which price direction is changed? ITF price direction is changed. HTF price direction is not changed. HTF price direction is HTF demand zone to HTF supply zone. But what is the ITF price direction? ITF price direction is now ITF supply zone to the ITF demand zone. Somewhere below, let us assume there is a ITF demand zone. So from here, now prices are moving towards the ITF demand zone. Because the ITF price direction is changed, can we plan short trade in this scenario? Previously, we learned even in low on the curve, we can plan short trades. Now, can we plan short trades? The answer is we cannot plan. We cannot plan short trades in low on the curve against the HTF price direction. What is HTF price direction? HTF price direction is not from supply zone to demand zone. It is not. Then what? HTF price direction is HTF demand zone to HTF supply zone. That means HTF price direction is against to us. When HTF price direction is against to us, previously what is the point we land? The location should be in our favor. If it is in our favor, we can plan the short trades. What is the location? Low on the curve. Low on the curve, what kind of area it is? It is buyer's area. In buyer's area, can we plan short trades? We cannot plan short trades against the HTF price direction and also against the ITF price direction. Here ITF price direction is in our favor, but what is not in our favor? HTF price direction is not in our favor. So that is the reason why short trades are not accepted even though trend is in our favor and ITF price direction is in our favor. Two conditions are in our favor, but two conditions are not in our favor. What are the two conditions that are not in our favor? HTF price direction is not in our favor. Location is also not in our favor. It's like 2:2. Two conditions are favor, two conditions are not in our favor. So that is the reason why you cannot plan short trades against the HTF price direction. And the location is not in our favor. If location is in our favor, against the HTF price direction, you can plan the trades. Location is in our favor, of course, trend should always be in our favor. Remember, when I am not talking about trend, you should always remember, trend should always be in our favor. If it is not in our favor, first of all, we can't plan the trade. You need not worry about the location, you need not worry about the price direction, you don't bother about them if trend is not in our favor. Always you have to plan your trades in favor of the trend. Even though trend is in our favor, if the other conditions are not supporting, you will not be planning your trades. You will be planning according to the rules. Those rules only we are learning now. Okay, so in low on the curve, even though ITF price direction is supported, you are not planning short trades because HTF price direction is not in our favor at low on the curve. Okay, fine. Now, that means against the HTF price direction at low on the curve, you cannot plan the short trades. This is the point you have to remember. Okay, next. Now let us assume now your ITF supply zone is at equilibrium. Now prices entered into the ITF supply zone and changed the price direction. Now ITF price direction is in our favor. Now ITF price direction is from ITF supply zone to the ITF demand zone. Trend is also in our favor. But what is not in our favor? HTF price direction is not in our favor. So when HTF price direction is not in our favor, location plays the role. What is the location? Equilibrium. In equilibrium, can we plan short trades? Yes, we already learned equilibrium, we can plan short trades. You can also plan long trades. It supports both. But in which condition equilibrium supports? When ITF price direction is from ITF supply zone to the ITF demand zone, at that time only short trades will be supported. Now in this example, is ITF price direction is from ITF supply zone to ITF demand zone? Yes. Because now the price direction is changed, now you can plan the short trades. Assume there is no supply zone, ITF supply zone. Now prices are further moving. That means ITF price direction is ITF demand zone to ITF supply zone. At the time you cannot plan short trades. Short trades should be planned only when ITF price direction is changed from ITF supply zone to ITF demand zone. Once it is changed, where you can plan short trades? In equilibrium area, wherever your prices entered into LTF supply zone. Always remember, our trades will be planned in the LTF zone, not at the ITF zone or not at the HTF zone. We will be planning at the LTF zone, lower time frame zone. Assume near the arrow mark there is some supply zone. When prices entered into that supply zone, at the time you can plan the trade. I repeat again, near the arrow mark there is a LTF supply zone, not ITF supply zone, LTF supply zone. At the time when prices entered into that LTF supply zone, you can plan the short trades. Why we can plan the short trades? Because ITF price direction is on our favor, trend is on our favor, location, that is curve, is in our favor. But which is not in our favor? HTF price direction is not in our favor. Even then, you are planning mainly because of the trend. Trend is a very powerful factor. Apart from trend, location is also favoring us. Apart from that location, now ITF price direction is also in our favor. ITF price direction is suggested us. ITF price direction is telling us, now I changed my price direction. Now I am moving from ITF supply zone to ITF demand zone. Until you reach the ITF demand zone, if there are any short trades, if prices entered into LTF supply zone, at the time you can plan the short trades. That is what it is telling. This is the second condition. Next, third condition. Assume there is no ITF supply zone, or due to some reason ITF supply zones are violated, whatever it is. Now prices entered into high on the curve, and before HTF supply zone, there is a ITF supply zone. Now do we need to wait to prices entered into HTF supply zone? No, we need not wait. Already ITF supply zone prices entered and changed the price direction. Now we can plan the short trades. Where we have to plan the short trades? When prices entered into the LTF supply zone within high on curve area. The reason is three conditions are in our favor. What are the three conditions? Condition number one, trend is in our favor. Condition number two, ITF price direction is in our favor. Condition number three, the location or curve is in our favor. Because all these three conditions are in our favor, even though the HTF price direction is not in our favor. Only one condition is not in our favor. Remaining all the three conditions are in our favor. So that is the reason why we can plan short trades. So that means against the HTF price direction, you can plan short trades at high on the curve and equilibrium. Provide trend should be in our favor, ITF price direction should be in our favor. If that is the case, high on the curve and equilibrium locations, you can plan the short trades. Of course, you have to plan short trades only at the LTF time frame. Whenever prices are entered into the LTF supply zones, at the time you will be planning your trades. So these are the important rules when you want to plan your trade against the primary price direction, that is a HTF price direction. Always you have to remember the rules. So to combine all these rules, trend, location, HTF price direction, ITF price direction, totally 4 conditions are there. HTF price direction, ITF price direction, trend and location. By combining all these 4 factors, we can define a decision making table for bearish trade setup. Here for trend, apart from trend always we look into ITF time frame. ITF time frame is the trend. Apart from that, to support this, even to make our bearish trade setup more strict, I have also introduced even HTF trend also, higher time frame trend, so that our trades will be even more strict and the more probability of success rate will be increasing. So that is the reason why apart from HTF direction, ITF trend and a location, I have also introduced one more column, HTF trend. So let us look into the rules. Let us plan our trades in favor of the HTF direction. So HTF price direction is supply zone to the demand zone. Even in favor of the HTF direction or against the HTF direction, the compulsory rule is in ITF direction in all these rows, HTF price direction should always be not HTF, I'm sorry, ITF. The ITF price direction should always be ITF supply zone to ITF demand zone. In all the columns, in all the rows in this column, you will be seeing supply zone to demand zone. Please observe in the upcoming rows. But otherwise, your ITF price direction is supply zone to demand zone. That means we are planning our short trades in favor of HTF direction. ITF also should always be supply zone to demand zone. Suppose if ITF direction is demand zone to supply zone, you cannot plan the short trades. That is ITF direction. ITF direction should always be ITF supply zone to ITF demand zone. Okay, what about HTF trend? HTF trend, because it is a bearish trade setup, HTF trend could be either downtrend or sideways. It should not be uptrend. Uptrend means again bullish nature is coming. Even though ITF trend is downtrend, if HTF trend is uptrend, it is kind of ambiguity scenario. That is the reason why HTF trend should either be downtrend or even sideways is also allowed. But in either case, ITF trend should always be downtrend. In all these rows, ITF trend should be downtrend, HTF trend should be either down or sideways. So these are the thumb rules. What are the thumb rules? ITF direction in all these rows, it should be ITF supply zone to ITF demand zone. HTF trend in all these rows, it is either downtrend or sideways. Similarly, ITF trend in all these rows, it should be downtrend. So these are the thumb rules. They should not be changed. Then what will be changed? HTF direction can be changed and the location also will be changed depending on these rules. Okay, what is that we land when HTF price direction is in our favor? What is in our favor? Because it's short trades, supply zone to demand zone. In HTF price direction and ITF price direction is supply zone to demand zone. In this scenario, location doesn't play any role. We don't bother about the location. That's why in any location, the trade is acceptable. Whether high on the curve or equilibrium or low on the curve. But only condition is ITF price direction should always be supply zone to demand zone. Which trades we are planning? Short trades. That means in all these rows, in this column, all these rows, it should be short trades because the heading itself bearish trade setup. In bearish trade setup, always we plan short trades. Okay, now second condition, against the HTF direction. What is against HTF direction? Demand zone to supply zone. But even against the HTF direction, ITF direction should always be in our favor. That means it is supply zone to demand zone, and HTF trend down or sideways, ITF trend should always be downtrend. But what about the location? Against the price direction, location plays the important role. According to the location rules, you cannot plan short trades at low on the curve. Only equilibrium and high on the curve are supported. That's why you have to plan your short trades either in high on the curve or equilibrium, not low on the curve. Why? Because the HTF price direction is against to us. Next, third scenario. Apart from supply zone to the demand zone, suppose if primary price direction is in our favor, there is a all-time high scenario. At the time, you won't be, all-time low scenario, not high. All-time low scenario. In all-time low scenario, there won't be any demand zone. So that is the reason why prices will be traveling from supply zone to all-time low. Supply zone to all-time low. This is at HTF price direction. ITF price direction also, either you have supply zone to all-time low, that is one scenario, or in ITF, there could be a demand and supply zones, both will be there. So in that case, supply zone to demand zone, later you will see the other scenario. That means HTF is a all-time high supply, sorry for my mistake. HTF is all-time low scenario, all-time low. That means HTF supply zone is a all-time low supply zone. But ITF there is a demand zone is available. So in this scenario, still the trend should be either down or sideways. ITF trend should be down. And in this scenario, all-time low scenario, when you draw the curve will be having only two scenarios, either high on the curve or equilibrium. Because in all-time low, there is no demand zone. That means there is no buyer's location. Without buyer's location, you cannot identify low on the curve. So that's why in curve we have only two parts, either high on curve or equilibrium. So in both these scenarios, you can plan for short trades. Fourth scenario. Prices are moving from all-time low to supply zone. But ITF direction should always be supply zone to the demand zone. In this scenario, you can plan your trades in either high on the curve or equilibrium scenario. Fifth scenario, supply zone to ATL. Previously, third also we have seen supply zone to ATL. But what is the difference? In third condition, we have ITF, we have both demand and supply zone. But let us assume in this scenario, even ITF also, it is all-time low scenario. That means there is a all-time low supply zone. So prices are moving from supply zone to all-time low. Even then, you can plan your trades high on the curve as well as equilibrium, short trades. Last scenario, HTF price direction is changed from all-time low to supply zone, but in ITF it should be supply zone to all-time low. If ITF also all-time low to supply zone, you cannot plan trades, short trades. Short trades should be always be in favor of ITF price direction. You cannot plan against the ITF price direction. We can plan trades against HTF direction, but you cannot plan against ITF direction. See here, this is a scenario against HTF direction, but not against ITF direction. ITF direction should always be in our favor. How it is in our favor? Trend is supported. Location also support, because in this scenario we have only two locations, high on the curve or equilibrium. Either one is supporting short trades. So that's why we can plan the short trade. So like this 6 conditions we can identify for identifying the bearish trade setup. Of course, all-time low scenarios rarely you will be seeing, because always you find very few stocks at all-time low scenario. So that is the reason why first two conditions are very, very important. All-time high scenario, many stocks you will be seeing. But all-time low scenario, very, very few stocks, rarely you will be seeing at all-time low. But otherwise, this is the decision making table. Always you have to use for identifying your bearish trades. If your decision making is saying no, you cannot accept the trade. If your decision making is saying yes, then that stock gets the eligibility. We are not confirming, I am saying eligibility. When you have to confirm, some more rules you will be learning in the upcoming lessons. And there you will be learning a concept called odd enhancers. So once you learn the odd enhancers, if that also supports, mainly odd enhancers you will be using checking the quality of the zone. If that also confirms the quality of your zone, then that increases the probability. Already this setups, bullish trade setup or bearish trade setup, that almost confirms your trade. That is either long trade or short trade. Bullish trade setup supports long trades, bearish trade setup supports short trades. And this decision making table already helped in identifying the zones having higher success rate. Apart from that, there is one more concept you will be learning, that is odd enhancers. Once you learn, that also confirms the quality of the zone. If the quality of the zone is also good, even though trend is very good, price direction is excellent, location is excellent, but still the quality of the zone is not good. What happens? The zone mostly it will be violated. If the quality of the zone is good, there are lesser chances of violating that particular zone, because the trend is in our favor, price direction is in our favor, and location is also in our favor. So this is the reason why you have to use a decision making table as well as the odd enhancer score. And odd enhancer score you will be learning in the upcoming lessons very soon, in probably in 1 or 2 sessions. I mean, after next session is not about odd enhancers. After the next session, probably we will be planning our odd enhancer score. Not immediately after, because there is one more concept that is exponential moving average. That is also you should learn. After completing that, you will be learning odd enhancer score. So this is about the bearish trade setup. Next lesson, you will be learning different income trade types. Income trade types related to short term, income trade types related to the swing or positional, whatever you call. And another one is a long term point of view also, medium term or long term point of view, income trade types. These 3 categories you will be learning different income trade types, and there you will be learning what is your HTF time frame, what is your ITF time frame, what is your LTF time frame. All these things in detail you will be able to understand, because some of you people are may not be comfortable with short term trades because you are a busy people, your time is not available, and a very small amount of time you will be able to spend in stock market. At the time you have to look for either swing trades or long term trades. So how to identify, that is what you will be learning. Or your time is available for a short term point of view. So what is the income trade type you have to use? Or every day your time is available from during the market hours, from morning 9:15 to evening 3:30 p.m. at Indian time, as per Indian time. If you are not an Indian or if you are a foreigner, so as per your stock market timings at your country, so during the time, start time until the end time, your time is available. At the time you can plan day trading. So at the time, what kind of time frames you have to use to plan your trades. So all kind of rules you will be learning in lesson 15. So lesson 15 will tell you what kind of trader you are based on the availability of the time. Based on the availability of the time. My condition is very clear. What kind of trader you are based on availability of your time. That is what we discuss at lesson 15. I hope the information in this video is useful to you. If you are having any questions regarding uh, bearish trade setup, so please put them in the comment section. I will try to answer your questions. If more explanation is required, I will release one more video. There is nothing wrong in that. Okay, let us all meet again in our next lesson. Thank you.